the reverse split secondary offering cycle. Did an episode on it on YouTube just a couple days ago, and a couple more examples. We are in a little just a I don't know what you'd even call it, a period where we're seeing them back to back to back to back. So the latest one yesterday, ICCM. This stock makes a remarkable move. Now, ICCM had news that came out. It came out at 4 p.m. on, what was the day? It was on the 19th. So, let me check the news on this. So, this was on the 19th. Let's see, right here. So, this is a biotech stock. Here's our headline. They announced a safe and effective that this ProSense product is safe and effective in treating kidney tumors with 89.5% reoccurrence-free rate based on interim study results. That sounds great. I mean, that is great. And you know what? This is awesome. These companies are coming up with some amazing treatments that can help people live longer. This is really good. But, this is the thing that we see that we have to kind of take it with a grain of salt, because the stock squeezes up, and boy, it squeezed quick. It went from a low of 95 cents up to over $11 a share. That is crazy. I mean, I know like this chart doesn't even make it look as exciting as it was, but this thing just went straight up. That's a huge move. Okay, so, then day two, yesterday, it sold off hard pre-market, which kind of surprised me. It comes back up, and at the open, it did rally off the low of 220 all the way up to 450. But then during the day, notice some of these really big candle wicks. And there's no chart today because right now the stock is halted because we've got news out. All right, so the news out this morning, let's see, that was on ICCM. So the news out this morning on this, well, what was the offering price? I'm trying to remember. Proposed offering. Have they given the price yet? It's halted pending news right now. I'm not sure if we have a price on. No price yet. All right, so we've got halted pending news. And if you notice yesterday, this price action, back this up a little bit. What we were seeing, I'm having a hard time loading my, let's see, I think it's because it's halted that it's not loading. Yeah, but that's not helpful. I need my 1 minute. All right, well, we could still look at the 5-minute chart. I'll switch this back to 1 minute. So the 5-minute here from yesterday, you kept seeing these upper candle wicks, right? There were a couple of really nasty upper candle wicks where it popped up and then flushed down, popped up, flushed down, popped up, flushed down, again, and then finally, selling off into the close. So it makes you wonder whether or not they were doing a offering priced at the market, and those big flush candles were them selling shares. Because when I was looking at it yesterday, and I could be wrong, it could be that there were insiders or some institutions that were holding that were selling shares. That's possible too. But there was a lot of selling, and we were seeing these big bursts of orders. And the way these orders work, you have to remember that the market is very segregated into pools. You have Citadel, right? You have Robinhood, TD Ameritrade, all of these traders that are executing their orders against this pool of liquidity that's within Citadel. And they're, it's a duopoly. It's them, and then there's Virtue, and well, I guess there's a couple other big payment for order flow companies, but their liquidity is sort of separate. So like if for instance you're on TD Ameritrade and you want to sell 50,000 shares, unless Citadel reroutes your order to the lit market, I'm trading on the lit market, right? Because I'm using the Lightspeed. So this is sending my orders directly to NASDAQ, BATS, EDGX, a couple different routes. So I actually don't have access to your liquidity. You may provide liquidity, but I don't have access to it. So the way this ties back to these direct offerings or the offerings that are priced on the market is that when you see these firms dump shares, they're dumping them within one of the pools that they have access to. So they may, I mean, I don't know, maybe they can access some of the pools that have more liquidity, but if they're selling it direct access on the open market, you're going to see these flushes where these algos basically it sweeps the book as you get the marketable order. And the reason that happens is because these high frequency trading algorithms, they subscribe to market data. So they see a 50,000 share block order coming in and they pull their orders that are on the bid. So the first order starts to fill, and then because of Reg NMS and the NBBO, it then reroutes the rest of it, the rest of it, the rest of it. And so the orders that were on the bid start to get pulled. And this has been going on for a long time. So all of a sudden you get this sweep effect where a big order sweeps the book. And all of a sudden the bid drops 15 cents. And then it can come right back up. And we were seeing a lot of that yesterday on ICCM. And I was just like, I don't feel comfortable trading this because it's hard to manage risk when kind of at any moment you could have that happen. So anyway, so that was on ICCM. So not a reverse split, but this is an example of a stock that had news and then turns around the next day, basically 2 days later, secondary offering. ATNF. Here's an example of a reverse split. Stock does the reverse split, and then, so they do the reverse split, they regain compliance for their NASDAQ listing, squeezes up, makes a big move, and then we've got the news of, let's see, this one's ATNF, $6 million offering. All right. So the $6 million offering, let's see, this was priced at $3.50 a share. Shares were up 55% shortly before 2:30. Let's see, and let me just check here. What time was this announced? Did anyone see the headline or the time of when that offering was, when that news hit? We had the stock split 20-1. Surprised I'm not seeing it on the 8K right up here. Maybe someone in the chat room. It was like 2 p.m. Right. Okay, so let's look at the chart. Yep, right there. So, yep. There it is. So squeezes up and then boom, right there. And that's the sell-off. Come on. I mean, it's just, we keep seeing this. We're seeing it again and again and again. And it's the small cap cycle. We've seen this for a long time, but we just keep seeing it. And there was one other, there was COSM. When I did my video the other day, I was talking about COSM, and then we got news that COSM priced an offering. What was it priced at? I can't remember. $32.5 million direct offering, priced at the market. $11.50 a share, which actually, that's right. I thought that was a pretty good price, but in any case, the stock pulled back. So this is just, again, urging you guys to be cautious, and you can always check to see whether or not a company has a shelf registration. So let's look, for instance, we have HTGM on the scanners today. Okay, so HTGM, let's start to look forward a little bit. Do they have a shelf registration? They do. It's from April. All right, so they have a shelf registration right here in April. Let's see how much it's for. So 9,700,000 approximate thousand shares. So now hold on, I'm just trying to understand this one. This registration statement. Let me look at the chart here for a second. So you can see it's got a fairly long history of selling off, right? So it's been selling off, it's been selling off. Then down here, you've got the secondary offering. Sorry, HTGM. Yep, similarly long history of selling off. Reverse split back there. That was a few years ago. This is what a shelf registration usually looks like. All right, $200 million. This looks like this is a registration of shares that they may have already sold. So in any case, you know, this was probably the vote on a reverse split. Let's see. Let's just check. Yeah, reverse split vote. So, you know, again, now we're wondering here whether or not in the next couple days could we see the secondary offering. Now, the thing is, usually part of this small cap cycle is that we'll see usually we'll see some good news like we did on ICCM. ICCM, that one makes a little bit more sense to me because they have good news out, which now warrants some new investors coming and being like, okay, I'll step up and invest in this company, right? So maybe they could raise more money because now they've got something that they can show, right? And that makes sense. When they do the secondary offering, but they don't have any good news, all they did was the reverse split, and then the stock kind of surged up. That's what you're like, the reverse split and then the stock just kind of popping up created the liquidity for that offering. I don't know. It's just, we just see it a lot. And lately, I don't know if it's because it's the end of the year, but we've seen in the last few weeks, we've seen like 10 of these. So we're definitely in a little bit of a cycle. And it's not to say that there's not some opportunity to trade them long or short. Some of them have been very volatile, so there could be opportunity there, but you do not want to be a bag holder. So make sure you are managing your risk, thinking about your downside before you're taking a trade because, hello, trading is risky, so take it slow. All right, that's just adding to the topic of what we talked about yesterday on reverse splits and secondary offerings.